The information contained in this podcast is an expression of opinion and does not constitute investment advice. This is the Gold Money Podcast with Alasdair MacLeod, keeping you up to date with expert opinion on precious metals and the markets.
Hello, this is Alasdair MacLeod on behalf of Gold Money, and with me on the line from New York, I'm very pleased to say I have Mark Skousen, who has a long history of being a professor of economics, and I think he started as an economic analyst with the CIA from 1972 to 1975. He later worked as a consultant for IBM and other companies, and he was a columnist for Forbes magazine from 1997 to 2001, and has contributed articles to the Wall Street Journal and various other well-known papers. He's been a speaker at investment conferences and has lectured for think tanks. Grantham University recently named its business school the Mark Skousen School of Business in honour of his many achievements. Mark was recently named to a list of top 20 influential living economists. He's a member of the American Economics Association and the Mont Pelerin Society, and is an award-winning financial advisor, best-selling author, and university professor. He's also producer of freedomfest, which this year is running from July the 10th to July the 13th, and it's an annual conference held in Las Vegas, and billed as the world's largest gathering of free minds on liberty. Welcome to the podcast, Mark.
Delighted to be with you.
Tell us a bit about Freedom Fest, because that's obviously an upcoming event and well attended. And I think our listeners in Europe in particular probably are not as aware of it as they should be.
Yeah, this will be our 7th year, and we hold it in the world's largest, most laissez-faire city of Las Vegas, world's entertainment capital, as they say. And during the day, we have this great intellectual feast where we talk philosophy and history and science and technology and geopolitics, healthy living. It's a little bit of a Renaissance gathering, if you will, of libertarians and conservatives from around the world. I see it as kind of an international gathering or general conference for free-minded individuals who believe in liberty and so forth, and we expect over a couple thousand people. Fox News is going to be a major network. John Stossel is doing his show there for the first time. So we're very pleased, and generally speaking, we don't invite politicians because they never tell you what they really think, but we do make an exception for Ron Paul and his son, Senator Rand Paul, who will be with us this year. Steve Forbes and John Mackey of Whole Foods Markets are our co-ambassadors. So we bring together a pretty cool group of people, and all the freedom think tanks are coming from around the world, whether it's Cato or Heritage or Reason or Barbara Combe brings her free market organization there from Vienna, Austria. The Adam Smith Institute. There's all kinds of groups that gather there. The idea is to bring together everybody physically once a year to learn and to network and socialize and celebrate liberty, or what's left of it, if you will. This year our theme is Are We Rome, since we are at Caesar's Palace. And so if your viewers go to freedomfest.com, they'll see our 2.5-minute video on Are We Rome, referring to the West. And decline and fall is on the minds of a lot of people, whether it's America or Europe or the West in general. So that's just kind of a summary of what we do every year at Freedom Fest. And it's really a fun event. It's kind of a conference that I've always wanted to go to. There's so many breakout sessions, and you create your own seminar conference that nobody's ever bored when they come to Freedom Fest.
Well, that sounds great, and I hope that some of our listeners can actually make it. You mentioned decline and fall in the context of the Romans. This time, is it decline and collapse, do you think? I mean, we see what's going on with the rate at which they're printing money, the intractable problems in the banking system, and also the intractable government deficits. How, in the sort of broad general sense, do you see things panning out, Mark?
Well, Well, I think it's inevitable that we have these boom-bust cycles as a result of Keynesian economics, kind of an elixir of Keynesian economics and monetary economics gone amok, where basically between fiscal and monetary policy, they're both rather negative in terms of providing stability, and so it's I think unfortunate that we go through these boom bust patterns, because I think it has we're basically selling ourselves short. There's so much technological advancement that's going on with new technologies that we can live a wonderful advanced economy that's within our grasp. We certainly have that capability if we would only unleash the entrepreneurial spirit and not have to worry about this boom-bust cycle, which, as the Austrians point out, is creating a lot of malinvestment. And this is a misuse of resources, and it's tragic. It's absolutely tragic. Now, you'll note in my comments a sense of optimism that technology is still there, and you have people working this very day on new technologies and how to improve the quantity, quality, and variety of goods and services that Carl Menger talked about. That was his way of describing the economy, and not just in terms of GDP or total spending, but the quantity, quality, and variety of goods and services. That sort of thing is still going on by scientists and inventors, the Apple people or Samsung or what have you. I mean, we must never forget that optimistic side of the economy, but it's being dragged down constantly by the boom bust cycle of over-regulation, over-taxation, and over-expansion of the money supply, if you will. So these all have their ill effects, and I think they need to be, austerity is the name of the game. It's inevitable when you have these excesses that have been created from time to time. But I don't think it's going to, you mentioned, I see decline and fall in terms of our monetary and fiscal policies, but I don't see this as a total collapse at this point.
Right, but so we're sort of almost in suspended animation, I suppose, on your analysis, insofar as they're not allowing the malinvestments to be unwound, but we're continuing along at considerably less potential than we would otherwise. Would that be right?
Well, I would actually disagree with you a little bit. I think that to the extent that private companies are readjusting their portfolios, cutting costs, being more productive, being more careful with their debt structure, that sort of thing is going on. So restructuring and downsizing and re-examining where you want to put your money, that sort of thing is going on, and corporations are wisely playing it conservative. They are sitting on, U.S. companies on like $2 trillion in cash. They are in better shape financially. Even the banks most banks are in the United States are in better shape financially. They paid off a lot of their TARP loans and are looking better on their balance sheet. So that's the positive thing. The problem is the governments. I think you have to make a distinction between what government is doing. Government is making things worse. They are taking on greater debt in general and making things worse. There's no doubt about it. So the private sector is in pretty good shape, but the public sector is still suffering from the worst effects of Keynesian economics, which is this idea that you can spend your way out of any problem.
Yeah, absolutely. I think another way of putting the Keynesian solution to all this stuff is if you corrupt the figures, no one will notice. sort of thing.
Yes, well, I think we are noticing. I think it's hard to hide this. I think in today's world, things come out. We have a very active media who are constantly. We have great blogs like this one, and yours is not the only one. I mean, there are literally thousands of these blogs out there and reporters out there that are digging out this kind of information. The biggest problem is what is being taught our students, and it's reflected in the media that consumption is the key to stimulating the economy, and if the consumer and the business aren't spending, then government should step in and spend. This is the Keynesian mantra that is so destructive. And, I just saw an article in the New York Times, there's a whole book on this, how austerity kills. And, of course, there's a downside to austerity. And, yes, suicides go up and bankruptcies go up, and there are serious ill effects to the inevitable austerity programs. But it's just like a company that downsizes, like IBM. I was a consultant for IBM in the 80s. And IBM has turned the corner and turned around rather dramatically after going through a very painful downsizing in the 80s. So we can learn a lot from what companies do to solve their fiscal problems and their excesses of the past, and how they get lazy and fat and have to cut out the fat and reorganize and rebalance their portfolios. Government seems to think they're exempt from this, but they are not. They have to respond to this, and they're not willing to do it because you have people like Paul Krugman out there saying, we need to double the deficit. We need to triple the deficit. This is the only solution, and it's just digging a bigger hole, I fear.
Yeah, no, I would go along with you on that one. There is another aspect of government which I'd be interested in your views on, and that is the constantly rising cost of welfare, which I think one of an American professor, Kotlikoff, came out with really very alarming figures some time ago that the, if you like, off-balance sheet net present value of those costs is adding something like $11 trillion to government liabilities every year. I mean, that's an enormous number. And it's difficult to see how governments, having weaned people onto welfare, actually get them off it. Can you give us any hope in that direction?
Yes, and you're right. I mean, you have to make a distinction. I think the study you're talking about is the entitlement problem, but I would separate that from the current welfare system. In other words, there's a difference between the Social Security and Medicare entitlement expenses and the so-called short-term welfare state of food stamps, Medicaid, and those kinds of, Section 8 housing. There's all kinds of programs that are out there, literally thousands of programs. And yes, it's out of hand right now. It's excessively generous welfare system that we currently have, and even the food stamp people, and they've changed the name to SNAP. So getting food stamps is easy as SNAP is the way I look at it. And there's 47 million. They're trying to encourage more people. Do you know anyone who needs to get on food stamps? And trying to take away the stigma attached to being on the dole. These are very unfortunate policies. But to be optimistic, I would say just go back to the Welfare Reform Act of 1996 that Bill Clinton and the Republicans pushed through, and it was very successful for up until 2008 financial crisis. People on food stamps actually declined because one of the requirements was if you are able-bodied after 5 years of welfare, you're off of welfare, you're no longer qualified, and you have to go get a job. And so that sort of thing is what we need to get back to, and we haven't done so under the present administration. But that's there is optimism. We do know the solutions. We can move on to. We know the solutions. We know the solutions to all of our problems. both monetary and fiscal. It's just that we're not willing to face them.
It's the willingness to face them, isn't it? And this comes back really to the the malinvestments that have accumulated, really not, I think, over just the last cycle, but over a very long period of time. Politicians would all do us a favour if they felt able to face up to them, but I suppose that we wouldn't vote for them if that was the case.
Yeah, I do think that there is a political side of political economy, if you will, that is not often taught in economics courses. Public choice is all about this political economy, and it does demonstrate that taxes are, people are more willing to accept new government programs than they are higher taxes. So there is a tendency toward deficit spending, and that's why public choice economists like Buchanan and so forth have always advocated a balanced budget amendment like the states have. And a lot of the states are not suffering like the federal government and other nations are because they have a balanced budget amendment. They're required to live within their means.
Yeah, absolutely. Broadening it out a little bit, I mean, we've been talking about the US. Have you any views on what's going on in the Eurozone? This is potentially a major global destabilizing factor if a major country like Spain or Italy creates a banking crisis which ripples on, rather like the Credit Anstalt crisis in the 30s. Is this something you follow very much, Mark?
Well, certainly we have to all follow what's happening in Europe because Europe is the direction the United States is headed. So over here we watch with great alarm as to what is happening in Europe. And one of the things that I find disconcerting is the misinformation out there. We have the same problem in the United States. Is this really austerity or not? And in the case of the UK, my understanding is that they keep talking about austerity, but in fact, government spending continues to rise and taxes have increased. That's not the solution that the Austarians or the Austrians advocate. They would advocate lower taxes and real government cuts spending. And my understanding is in Greece, for example, that while they've cut certain areas and so forth, they've still yet to eliminate a single government job. They haven't fired any government workers. Now, I could be wrong about that. I know that was the case a year ago. May still be the case. I don't know. And then I do look at countries like Estonia, and others have dismissed this as a small country that's based export-oriented, and so this doesn't apply. But they have had real cuts in government spending. They have actually reduced taxes, and their country is growing at 7 or 8%, from what I understand. And I also like to point to Canada in the mid-1990s as a classic example of austerity, where they did cut a bloated government. They did fire 60,000 federal Canadian workers, which was a lot of people. They balanced their budget in 2 years. Without going into a major recession. And their country turned around. They engaged in 11-year supply-side tax cut policies. Their corporate tax rate is now down to 15%. And their Canadian dollar is now equal to the U.S. dollar. So they didn't have much of a financial crisis. They have had some deficit spending during the financial crisis, but they're digging out of that. So I think we need to look to places like Estonia and Canada and even Australia and New Zealand, which did not suffer significantly. And, of course, all of those, what's interesting is Krugman. I've talked to Krugman personally regarding this, and he's always saying, well, they were export-oriented, they're commodity economy, and so that got them out of it. But the point is that all of these Keynesians, like Krugman, opposed the austerity programs when they were imposed. Even though they turned out to be a success, they were not willing at the time to support them. So it shows the vanity, if you will, the arrogance of the Keynesian profession who now feel they're in the driver's seat.
Yeah, no, that's interesting. And I think there's an interesting point about austerity in Europe. In many of these countries, the austerity is not falling on the public sector, as you intimated with the example from Greece, but it's actually falling on the private sector. And we've seen with France, for example, a combination of income taxes at 75% at the top end, plus wealth taxes, have taken quite a number of people. I mean, and movers and shakers into the tax bracket of more than 100%. So
it's like shooting themselves in the foot, though, because as you know, the basis of the support for the public system depends on a vibrant private sector, and when they tax them at these high rates and regulate them as they do the labor market, you're not getting a recovery. So it's almost a catch-22 situation that's most unfortunate. But there is Adam Smith has this wonderful quote in The Wealth of Nations about how the daily acts by individuals to improve their condition achieves a higher level of progress despite the greatest administration of errors and the greatest blunders of government. And
exactly
that senses, Adam Smith's optimism, if you will, that I share. We're not talking about the black market activities. We'll probably sustain a lot of these economies as we go along.
Well, I'm sure if it wasn't for black market activities, Greece would have collapsed completely by now. Very quickly, your thoughts on Japan?
So Japan is adopting what I think is an unnecessary easy money policy of expanding rapidly the amount of yen, and of course this is creating a boomlet in the stock market, I've noticed. Now, whether it really shows up in real economic growth, I don't know. But I'll tell you something interesting. I've never really bought into the idea that Japan was suffering tremendously from deep deflation and recession. And as a matter of fact, I don't know if you saw this article in The Economist that was run several years ago, but they showed the statistics of, say, the last 10 years of growth of the G8 countries, and the United States was near the top in real GDP growth, and Japan was near the bottom. But then when they switched the statistics to per capita real GDP, Japan went to the top and the U.S. went to the bottom, practically.
Really? Interesting.
Yeah, and basically the reason is because Japan doesn't have much of a population growth, while the U.S. has been growing at 4% or more per year due to immigration and what have you. So in per capita terms, Japan is doing just fine. So I'm not sure why. And, I don't know if you've been to Japan before, but if you've been to Tokyo and these countries, it's buzzing with activity, and they've got every gadget imaginable and technology and so forth. I just don't understand why. I guess it's because the stock market was still in the doldrums. They decided to adopt this policy, but it certainly is working. And I'm sure Milton Friedman, who was a dear friend of mine and was very strong advocate of this very policy. Of the key to getting Japan going again is to pump more paper money into the system, more Japanese yen, and that's exactly what they're doing.
Yeah, well, we've got sort of part one of that. The results are yet to work through, perhaps. But I can't help but feel that the reason that they're so aggressively pumping paper into the system is because it's the only way with a quadrillion yen of debt that the government can now finance itself, given that the savings are now being withdrawn by an elderly population, an increasingly elderly population who need it to subsist on.
Well, and they're going to have to put it in the stock market and to earn some dividends, to earn some income. I don't think dividend-paying stocks are as popular in Japan as they are in the United States. But this is what you have to do, because interest rates have actually declined in Japan. as a result of this policy. I don't know if you've noticed that or not, but
Yes.
so that is forcing the people who are on savings to get out of that and invest in more risky assets, which would be the stock market. And that's what's happening. It's happened in the U.S. for some time now. I've been a very strong advocate of dividend-paying stocks, and we're getting 6 or 7% return on our money. This is leveraged closed-end funds and so forth, investment funds, but it's been a very successful strategy, and that's what's happening in Japan.
Yeah, absolutely. Switching lastly, in the few minutes we've got, to gold, there's been huge volatility in the gold price recently, and there seem to be two camps. You've got investors who play the trend, and when the trend goes, they get out or they short it. And you've got all these people, I suppose, all over the world, but more predominantly, certainly in Asia, who are accumulating gold simply because they distrust their domestic paper currencies, if you like, instinctively, perhaps. And this, it seems, is producing a difference in that you've got the capital markets have turned sellers, whereas the people who are, if you like, putting their long-term savings, rather than having rupees or yuan or whatever, are actually increasing their buying. This isn't going to work out well at the end of the day, is it?
Well, first of all, I think there's two factors at work here. One is, I believe that with the fear factor of inflation and the constant active monetary policy of expanding the money supply and sharply reducing interest rates, that combination led to gold and silver becoming almost hot commodities and running up too far too fast. So I always felt that when gold was at 1900 and you had all these pundits predicting 2500 or higher gold, that was typical of a topping pattern, technically. And so we actually, in my newsletter, sold our ETFs in gold and silver back in late 2011. It turned out to be a very good call. And the other factor is the fear factor, the fact that after 5 years after the 2008 financial crisis, there is a sense of that things are getting back to normal to some extent. The economy is recovering, and we haven't had this a second collapse that people are predicting. So I think the fear premium on gold is coming down as well. So those are the two factors. It's a technical sell-off, and there's also this feeling that, maybe even interest rates have come down in Europe, right?
Yes. Yeah.
So those are two factors to indicate that the fear factor has been reduced. Now, I think it's all largely artificial. We can't ignore the Fed policy, the QE 1, 2, 3, and eternity. All of that playing its role to create this feeling that the worst is behind us. Having all said that, the question is, where is the bottom going to reach? And I still think the jury is still out on that. I mean, the fact that gold is up $20 and then down $20. Look, there's one scenario that argues that gold could go substantially lower if the strength of the dollar continues to rally. Given what Europe is doing, given what Japan is doing, the dollar is looking better than those currencies, right? So if interest rates finally start rising in the U.S., gosh, the dollar could rally even more, and gold could head down even further. So I'm a little bit agnostic right now on the gold price. The gold mining stocks are looking very attractive at this point. I mean, if you look at IM Gold or Newmont, even Hecla, I was looking at Hecla the other day, and there's some heavy insider buying going on that stock. suggests, rather highest dividend yield in some of these stocks that we've ever seen, 4 or 5% dividend that you can get on mining stocks. They're selling at PE ratios of under 9 or 8. So from the mining stocks point of view, they look pretty attractive at this stage.
Yes, I think inevitably, with everything that's been going on in gold and silver, that they have really been hit very, very badly. So that's an interesting point, I think, to end on. So I'd like to say, Mark, thank you very much indeed for taking out time to talk to us, and hopefully, your optimism will be borne out.
Well, I would like to think so. There's much ruin in a nation, as Adam Smith said, and I do have that optimism, but I don't want to be Pollyannish either. We do have serious problems. We know the solutions. We're just not willing to take them at this point. And I hate to see austerity get a bad name, because that's the only solution.
Absolutely. Well, thank you very much indeed.
Okay, thank you.
Subscribe to the Gold Money newsletter at www.goldmoney.com to receive email updates on new articles, videos, and iTunes podcasts from our Gold Research section.